In this video, Cathie Wood of ARK Invest has just dropped an epic blog post saying in her 4 decades in the markets, she has never seen a bigger dislocation. Let that sink in. In this post, Cathie Wood explains the insanity in the stock markets and shares some of the breakthroughs we saw in 2022 in genomic sequencing, robotics, energy storage, including electric vehicles, artificial intelligence, and blockchain technology. If you want to skip around, there's timestamps for each different section below. But if you're a smart investor, I highly recommend listening to the entire video. After all, you don't want to miss what's happening in some of these enormously disruptive areas. And don't forget to head over to Patreon. Dropped another exclusive video today, 274 exclusive videos and counting. Can hardly keep up. If you're not a member, you can join with the card in the corner. And if you are, you definitely don't want to miss today's video. There's a very valuable lesson. What the market overlooked in 2022. A letter from Cathie Wood, ARK founder, CEO, and CIO. In 2014, I founded ARK Invest for 2 reasons: to focus exclusively on disruptive innovation and to create a transparent research ecosystem designed to surface and share information on the convergences between and among the 5 major innovation platforms evolving today. Involving 14 technologies, those platforms are multi-omics sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. In 2022, one of the most challenging years in market history, transparency was more important than ever as shares of innovation-focused companies suffered disproportionately. In my 45 years on Wall Street and more than 30 years in portfolio management, I have never seen markets this dislocated. So, ladies and gentlemen, this is just the opinion of one person, but this is one person who's been in the markets now for many, many decades, longer than most of you have been alive. And this is a big statement from Cathie Wood. She has never seen the markets this dislocated. Most people watching this channel are Tesla stock investors, and I think even just through the lens of Tesla stock alone, she might be onto something. Today, money supply is declining, commodity prices are deteriorating, bloated inventories are unwinding, and innovation is disrupting the traditional world order, all pointing toward lower inflation, perhaps deflation. Notwithstanding the US Federal Reserve's rhetoric, the bond market seems to be corroborating this outlook with 10-year Treasury yields in the 3.5% range and a yield curve that has not been this inverted in 40 years. Both metrics suggest that real growth and inflation could surprise on the low side of expectations this year. That said, plagued by fears, keyword there, fears of entrenched inflation and higher interest rates, the wall of worry in the equity markets has scaled to enormous heights. Historically, a positive backdrop for equities. According to the latest BofA Fund Manager Survey, investors currently are holding high levels of cash, levels not seen since the 9/11 crisis in 2001, and are overweight in bonds for the first time since April 2009. In December, the Chicago Board Options Exchange equity put/call ratio reached a record high, surpassing levels seen during the tech and telecom bubble and the global financial crisis. In hindsight, both of those times were terrific opportunities to put funds to work in highly differentiated strategies. I believe that the current market dislocation presents an opportunity for innovation strategies to thrive when equity markets recover. And just between you and I think Cathie Wood might be onto something. I could be wrong here, but I personally think if you took a pretty random approach and just literally picked random growth stocks, tech stocks, stuff that's been absolutely crushed. I'm not going to name names because I don't want any of you fucking morons going out and doing anything dumb. But you know what I'm talking about. If you picked a random selection of these companies, fast forward 5, 6, 7, 8, 10 years, I think you'll probably be pretty happy with the returns. Some of the valuations at this point in time seriously don't make sense. They're all fear-induced. They're panic-induced. The wall of worry is real. Of course, anything could happen and time will have to tell. Fear of the future is palpable, but crisis can create opportunities. In the spirit of prudent portfolio management, we believe an allocation to disruptive innovation is likely to balance a comprehensive wealth portfolio. Disruptive innovation not only provides access to potential exponential growth opportunities typically absent from broad-based indices, this is an important point, by the time stuff makes it into most of the major indices, often a lot of the growth is already there, which is why they're now in the indices, but also offers an opportunity to hedge against the increasing risk of incumbents being disrupted. Shout out to legacy automotive manufacturers as one example. In the next few sections, I would like to communicate examples of game-changing innovation that the equity market largely ignored in 2022. In the face of market headwinds and media criticism, as we know, everything the media says is true, including their criticism being valid. So, in the face of market headwinds and media criticism, these breakthroughs are corroborating our original research and boosting our confidence that ARK strategies are on the right side of change. Disruption can surface in surprising forms at unexpected times. Innovation solves problems and has historically gained share during turbulent times. Next generation internet, ChatGPT. I'm sure pretty much everyone watching has now heard of ChatGPT, right? It's fucking crazy. Artificial intelligence is advancing at an unprecedented rate, with ChatGPT, a version of GPT-3 optimized for conversation, signing up 1 million users in just 5 days. This uptake is particularly impressive compared to the original GPT-3, which took 24 months to reach the same level. ChatGPT already scores above the national average on the SAT, demonstrating its potential to revolutionize the way we approach knowledge work. Now I'm going to skip ahead a couple of these things. If you guys are super interested, pause the video, connect the TV, lots of progress there, some strange stuff about ad spend, but we'll move on. Digital wallets. Allowing users to transact on their smartphones, digital wallets are replacing cash and credit cards. They overtook cash as a top transaction method for offline commerce in 2020 and accounted for about 50% of global online commerce volume in 2021. During the 3 years from pre-plague levels in 2019 to 2022, Square's payment volume soared 193%. 6 times faster than the 30% increase in total retail spending. Social commerce. While overall e-commerce spending increased by 99% over the last 3 years, social commerce, as measured by Shopify's gross merchandise volume, grew by 312%, almost 4 times faster. Social commerce is taking significant share from traditional e-commerce and offline retail sales. In case you're wondering, social commerce is the use of social media platforms, Instagram, Facebook, and so on, to advertise and sell products directly to consumers. Blockchain technology. Despite the recent collapse of crypto exchange FTX, underlying public blockchains like Bitcoin and Ethereum have not skipped a beat in processing transactions, highlighting that their transparent, decentralized, and auditable ledgers could be a solution to the fraud and mismanagement associated with centralized, opaque institutions. After the FTX collapse, the share of trading volume on decentralized exchanges, which allow for trading without a central intermediary, rose 37% from 8.35% to 11.44%. Total crypto exchange trading volume declined 66% year over year, from $1 trillion in 2021 to $357 billion in 2022. But the fallout from Terra, Luna's, and FTX's collapses propelled Coinbase's share of fiat-based exchange volumes, including Binance International, by 18 percentage points, from 22% in June to 40% in December. FYI, I'm still quite bullish on Coinbase the company over the long term. But now the moment most of you have been waiting for. Autonomous technology and robotics. Electric vehicles. During 2022 in the US, as US auto sales dropped 8% on a year-over-year basis, Tesla's sales increased around 49%. During the past 3 years, Tesla's market share of total auto sales in the US has increased 240 basis points to 3.8%. Translation, approximately 1 in 26 vehicles sold in the US in 2022 was a Tesla. By the way, this is before the Austin factories ramped up, before the Cybertruck's released. I'm just saying. Autonomous driving. In 2022, GM's Crude expanded its autonomous taxi service to most of San Francisco in the first large-scale rollout in any major US city before launching in both Phoenix and Austin toward the end of the year. It compressed time to commercialization from 9 years in San Francisco to just 90 days in Austin. Also, Tesla expanded access to its FSD, full self-driving beta software, to all owners in North America who had requested access, reflecting Tesla's confidence in the capability of its feature set. This, by the way, was a watershed moment. Did not register at all on the blip of any Wall Street analysts or anyone in the finance media, but it was huge. Anyone in the US who requests access can now use FSD beta. The data flywheel is in overdrive. Autonomous logistics. By January 4th of this year, both Amazon and Walmart had begun deliveries using drones in select US cities. Let me know in the comments below how many of you didn't know that. 3D printing. Across the top 50 medical device companies, 90% rely on 3D printing for prototyping, testing, and even printing medical devices. Space exploration. In 2022, SpaceX nearly doubled the number of rockets it launched to 61. It reused the same rocket in as few as 21 days, a dramatic improvement over the 356 days required for its first rocket reuse. Industrial robots. Did somebody say Optimus Bot? Coming soon. Despite trade tensions with China and the impact of the plague, industrial robot sales increased 30% in 2021, highlighting that innovation can thrive during tumultuous times. This is a very telling chart. Industrial robot price elasticity of demand. In other words, how much demand is there for industrial robots based on the price? Obviously, cheaper equals more demand. Same it's true for any technology. Over on the left here, unit sales of industrial robots from 100,000 up to 600,000. And along the bottom here, we have the modeled unit price of an industrial robot in thousands, e.g. $120,000, $80,000, $60,000, $40,000, $20,000, etc. FYI, industrial robot prices around $20,000 today. And the market size, give or take, about 500,000 units. What do you think happens when Tesla continues to innovate on the Optimus Bot, drive costs down, mass produce these things? Demand is going to scale exponentially, and that is putting it lightly. Energy demand. Demand for crude oil may have peaked in 2019 at 100.5 million barrels per day, particularly now that electric vehicles are taking share of total auto sales and ride-hailing companies like Uber are partnering with rental car companies like Hertz to rent EVs. Now, just in case you guys don't know, Hertz, some serious 420 IQ shit right now, order over 100,000 Tesla vehicles for their own fleet. But in addition to that, they also set up a sub-business that literally partners with Uber. Hertz rents their Tesla fleet, some of their vehicles, to Uber, who then on lease to Uber drivers who can now lease a Tesla for a couple $100 a month and save an enormous amount of money, increasing their profit as an Uber driver, because the total cost to own and operate the EV, recharging, is a fraction of the cost of gasoline. They're massive money printers. The fact that it's profitable for Uber to rent Teslas from Hertz and then to rent them on to Uber drivers and make a profit along the way just goes to show the compelling economics of an electric vehicle over ICE. Hertz says that EV maintenance costs are 50 to 60% lower than those for gas-powered cars. According to ARC's research, thanks to their high utilization rate compared to personal cars, autonomous electric vehicles could lower oil demand by 25 to 30% to 72.6 million barrels per day by 2030, as shown below. You can see in purple here, autonomous EVs having a significant impact on global oil demand, especially in the second half of this decade. Genomic revolution. Base editing. In 2022, thanks to a new form of gene editing, a young girl in the UK with leukemia went from her deathbed in May to cancer-free in November. Base editing and multiplexing have the potential to provide more effective CAR-T treatments for patients with otherwise incurable cancers. Prime editing. In 2022, Dutch scientists used another form of gene editing, prime editing, to correct a mutation that causes cystic fibrosis in human stem cells. In addition, Korean researchers used prime editing successfully to treat liver and eye diseases in adult mice. CRISPR gene editing. Awarded the Nobel Prize in Chemistry in 2020, CRISPR gene editing has delivered functional cures for beta thalassemia and sickle cell disease. CRISPR Therapeutics and Vertex Pharmaceuticals have treated more than 75 patients, resulting in some well-publicized functional cures. They are expecting FDA approval for exa-cel, the treatment for sickle cell and beta thalassemia, in early 2023. Other cell and gene therapies. In 2022, regulators approved several landmark cell and gene therapies, including Hemgenix for the treatment of hemophilia B, Zyntelgo for beta thalassemia, Skysona for cerebral adrenoleukodystrophy, Yescarta and Breyanzi for non-Hodgkin lymphoma, Tecartus for mantle cell lymphoma, and Carvykti and Abecma for multiple myeloma. P.S. I probably pronounced every single one of those words wrong, just saying. Molecular diagnostic testing. Liquid biopsies, blood tests, are enabling early detection of colorectal cancer, which, if discovered at or before stage 1, have a 5-year survival rate greater than 90%. Late stage or metastatic cancers account for more than 55% of deaths over a 5-year period, but only 17% of new diagnoses. Thanks to regular screening and liquid biopsy, colorectal cancers are now among the earliest detected cancer types, 37 at or before stage 1. In 2020, the death rate from colorectal cancer was 12.8% per 100,000 persons, 38% below the 20.7 in 2000. Ladies and gentlemen, expect further enormous progress in terms of liquid biopsies. You probably know, but just in case you don't, the earlier you detect stuff, especially cancer, the more likely you are to survive. Liquid biopsies, blood tests for cancer, the earliest of early detection. This will save countless lives. I just want to bring things full circle. We heard earlier in this video, one of the very first things Cathie Wood said in this blog post, that she has never seen a greater dislocation in the markets. Never. Not in her 4 decades. It is a very big and profound statement. The very technologies and companies that will disrupt many hundreds of billions and then trillions of dollars of legacy, archaic technology and the old world, bricks and mortar finance and banking, the healthcare system, medicine, transportation, energy storage, labor, and intelligence itself. The very technologies and companies that will accrue trillions of dollars in market cap and simultaneously destroy hundreds of billions and trillions of dollars of market cap in the companies and industries they disrupt have been absolutely crushed. At this point, I think the stock market thinks up is down and down is up. Of course, I could be wrong and Cathie Wood could be wrong, but I don't believe either of us are. As I said earlier, I really think if you threw darts at some of these companies, closed your eyes, fast forward 5-10 years, you'll probably be pretty happy with how things turned out. The writing is clearly on the wall. Yet the stock market seems to be illiterate. Guess that must be down to more fear-induced brain damage, huh? The recent explosion in AI capabilities, ChatGPT, as well as some of these image generation technologies, DALL-E 2, etc. Absolutely mind-blowing stuff. Just hinting at some of the exponential progress of artificial intelligence in just a few very narrow domains. And guys, you do realize that a full self-driving car is also a form of artificial intelligence, right? We saw image classification go boom out of absolutely nowhere years ago. We're now seeing image generation. We're now seeing language models go vertical. Meanwhile, the stock market overall seems to be panicking out of innovation and disruption and technology, running to the tried and true, the super safe stocks like energy. I got a funny feeling Cathie Wood's blog post is going to age quite well, and I got a funny feeling the collective actions of the stock market over the last few months and even year or so are not going to age well. The very companies and technologies that will accrue insane value this decade are the ones whose valuations have been crushed and decimated. If ever you needed an example, the stock market is short-sighted, short on brain cells, short-term, and can be completely blind to reality and the inevitable future. 2022 is the perfect example. I think I'll leave it there, but don't say I didn't warn you. Finally, don't forget, head over to Patreon. Lots of stuff discussed over there. I can't cover everything here on YouTube. A little bit of Tesla, disruptive technology, health, longevity, wellness, peak performance, psychedelics. No topic is off limits, but fair warning, you're probably going to get butthurt or mad at least half the time you watch one of my videos. What's new? So, see you over on Patreon if you can handle it. Love ya.